All right, folks, Brandon Chapman with you today. It's another edition of the Theo Night video for Monday, December, 6th, 2021. We're about, 3-4 weeks out before the Christmas, before the end of the year and the beginning of 2022. Pretty crazy. We're knocking on the door here. And as we look at the market more broadly, it's not been a great December thus far. As we look back, the first, we experienced a large down day, but the last few sessions, we've worked our way slightly higher, although nowhere near the high that was established overnight between the 30th and the 1st. So it's interesting as we go forward. Will there be a Santa Claus rally this year? Santa Claus rally occurs between Christmas and New Year's. Will we make anything between the end of October high and the end of the year, which is about where we're starting right now, at the beginning of November 1st? There's just a lot of uncertainty as we play out here. As basically, we look at the jobs numbers. Very disappointing last week. We got the JOLTS numbers coming up this week. Piggybacking on that, we also have inflation numbers. And then next week, we have the FOMC statement where the Federal Reserve is going to give an indication as to what their policy is about to be going forward. They're definitely not going to raise rates. It's going to be all about the taper. The question mark today as we watch the bond market, we'll look at the TNX here today. Basically making back all the gains that it had from Friday of last week, where we had a pretty significant breakout. Is this an indication that the Fed is in the mode of tapering more quickly, possibly, increasing the likelihood of an earlier rate increase for next year? Right now, what you're seeing is we're spooking the bond market a little bit, and we're seeing a sell-off as the 10-year is up 0.91. We look at the FVX, the 5-year is 0.89, and we look at TYX, up 0.79. So the 10-year sold off by the most. We're going to circle back to some unusual option activity here. As we look at the sector performance, the best performer today was Staples. Utilities at one point was the best performer. So was energy, by the way. As we look at Forge/CL, oil prices were rallying today. We saw good option activity last week in a number of names. For example, Halliburton had bullish activity early last week on that down period. Devon Energy as well. We had Oxy too. I mean, a number of energy stocks. Today, Exxon was kind of feeling a little bit. It was up about 1.13%. But again, the energy trade did fade just a little bit to enter the day, with oil performing largely better than many of the constituents that, obviously drill oil, right? As we look at energy sector, only up 1.49%. But that is an area to look at, because when you look at the product depth here, Forge/CL, what you'll notice is that, again, we're still in backwardation. Maybe this starts to turn here and starts to round. But as of right now, it certainly makes sense. We could see a little bit of a bounce back off the 65 level in oil and may carry energy stocks. But again, I can't help but point to some of the defensive move that was happening today in XLP. And it appears to be there may be some sort of rotation going on towards companies that are relatively undervalued. Last week, there was some bullish activity, for example, in Cardinal Health. Did a blog post on it. Faded today. Was up decently early. Finished up 1.45%. IBM today was up okay for a little while, then faded. You look at some like an Intel, for example, was up strongly at 3.5%. It does feel like the market's searching for some areas that may be a little bit undervalued relative to other parts of the market. So as we look forward, as the market continues to move here, today was not great for those who are more cyclical oriented, that were down a bit last week, that they might have been the ones that were leading out and recovering today. It may mean that the market's move might be a little more slow. As we look at, for example, SPY, the reason why I'm bringing this up, if you look at Trade Flash today, there were 3 large equity trades. 1.5 million shares in one print of 457.30, 1.5 million at 457.29, 1.3 million shares at 453. I really wouldn't worry too much about the fact they're sell transactions, more about the price levels. And it's been really, really active of late. You look at today's open, you look at today's close, both occurred at key levels where we had huge prints of 1 million shares and 1.3 million shares. You'll see in the middle today about from today, 1.5 million shares of 457.30, 29. It's kind of brought them together there. But what this identifies as areas of agreement. Today's low tagged, the low today, 1.35 million shares at 453.34. So the point is, we're working our way between these levels intraday. So it's good to kind of monitor this and again understand that the activity level, the large prints are coming in, and it's occurring at a time where the Fed's giving cover for those funds to be able to sell into this market. And again, as you watch these levels, when you break a level, you're going to the next level. So if we take out this, we might be looking at it going here. Unfortunately for today, we finished at that same price level, that large print that was from back here on the 1126. So again, the near-term direction for the market, we might have a chance of edging higher here in the near term, but the leadership of staples today was not super encouraging, and the failure of technology to lead was certainly, again, not very encouraging. As we circle around to some of the bond market, there were a number of larger trades that occurred today in the bond space. I did a blog post on it, which is free for everyone to read. But let's start with TBT. TBT is a bond ETF that moves inversely to that 20-year maturity, 20 to 30-year maturity. So again, if long-term bonds sell off, like a TLT, yields on the TYX rise, this would generally move with yields. And again, it's ultra short, so there's leverage in this as well. So as we look at TBT today, some of the activity that came through was on the 18 Feb expiration. Calls being bought at the 17 strike price, mostly bought in one print. So you'll come down here, time and sales, you'll see 4,400 contracts bought at 69 cents. And again, when you look at the open interest, that's greater than the open interest. This is new activity for 4,400 contracts. When I recorded earlier, it was about 51. Point being is that that's a rather sizable trade expecting what? TBT to rise, which means bonds are going to sell off. And it wasn't just isolated to TBT. For example, TLT, also today. This was a shorter expiration, a 17 December. And as we scroll down here, you'll see trading on the put side. Just rolled right past it. So 17 December, 154 puts. They've kind of moved in the money a little bit since, but 154, you'll see 9,900. You saw some building here as well at 22,000. This one I was kind of focusing on earlier. 9,900 contracts, mostly bought between 208 and 232. But the point being is, again, what? Angling or looking for more downside. And again, that occurred earlier in the session. As the day we're on, obviously, we began to accelerate to the downside. Popped, it's probably a straight print there. But the point being is we saw further selling after that occurred earlier this morning, right around kind of that, right around in here. Sorry, right around there. Also, as we look at another area, we're looking at TIP. This is normally indexed to inflation, right? But if generally bonds are selling off, that's generally not good for TIPS Treasuries. As we look at today, the trade in TIPS was an 18 Feb. And if we scroll down, you'll see 3,000 contracts. Bought the 126, sold the 122, expecting near-term downside towards 122 in TIP, which is way the heck down here. And again, is it likely to get there by February? I guess maybe the Fed continues to, if inflation is not as much of an issue, if people are expecting more of a misstep with the Fed or just general selling in the bond market, maybe we have a shot. There's about 74 days left. Again, that's a bit of a reach, but it is a bearish indication. Someone's thinking some downside shots here in the bond market. And finally, with LQD. LQD today, it was a little bit of a confusing. This says plus. I would expect that to be probably a sell. In this case, selling calls to buy a put spread, buy the 134, sell the 130. Again, another bearish trade, generally fitting the construct that we're seeing here in the market. And again, we're looking for downside maybe to 124 by February. So that's a lot of bearish activity coming in today on the option market, looking for downside in the bond market. I think it's something we do have to take notice of. I've been pretty bullish on long-term treasury bonds since the 28th of September. This is one of my top-down Friday watch list on the 13th. This might be a point that if you're not really willing to weather a pullback, much of a pullback, you might consider taking some profits here, looking for longer term, probably getting back towards 173 or higher. But in the near term here, this would be a very reasonable point, maybe to pull back towards 148 on TLT. And again, more of a near-term pullback with a longer-term bullish expectation. Now, as we talk about inflation, and the Fed may be starting to address it, BITO, which is ProShares Bitcoin Strategies ETF, down sharply to about 8%. As you look at just look at Bitcoin, also down sharply. A bit of a bloodbath over the weekend. And again, this just shows that we're working off some of the excess, meaning you have a lot of speculators out there leveraged. They're getting ripped out of it, which ultimately is pretty good for this product longer term, is if we take out the speculation and it's able to rest more on its true valuation and be that store of value. As we look at gold today, /GC, gold was down minimally as the dollar is not strengthening a lot. But if you look at UUP, you'll see again, it was a minimal stronger dollar. The dollar's been much stronger against the euro of late. And again, and also gold of late. So as we're ripping out some of the excess in gold, some of that speculators, the leverage, the paper gold market. Now we're maybe setting up here, and generally speaking, from a seasonal perspective, gold generally bottoms in December. It does well in January. So I think we're in a position right now where you might look at that possibility, even though today we did finish slightly lower with a slightly stronger dollar. Of course, as you think about, trying to make your way in this world today, anyway, quote shares, DWAC, obviously down a bit today. SEC looking at them. Of course, they're going through $1 billion offering. Of course, that's Trump's going to be his social platform here shortly. But again, makes sense that people are looking at it. Is there anything he does that people don't look at closely, both positively and negatively? It's just another one of those. But again, DWAC is down a little bit today on that news. Other trades here that unusual option activity. ATVI is one that's interesting. The stock finished up about 1.27% today. It fits that profile of a stock that's been beaten down quite a bit. I don't necessarily know that it's a tremendous value at this point, but could we get a near-term bounce towards 63, 64? Absolutely. And the trade that we saw today in ATVI, or that I saw today, was a 23 December expiration, 13,000 contracts traded out here. A little bit of a mixture, but early on, there's some buying activity at that 63 strike. Looking for that to maybe continue, and gives you kind of a near-term target here of about 63, which is just above the 1/3 retracement of the most recent sell-off. Another one here, again, you think about the reopening thing, you think about Cinemark, again, back at support. Got a nice move today, not a ton of volume, however. Earnings coming up the end of February, but in an interesting trade on CNK, it was kind of a combination where you're buying, a kind of a call spread, selling some puts for this 21 Jan expiration. So again, you're selling the 1250 to finance a 1750, 2250, or even the possibility that 2250 might be rolled down to 1750. Either scenario, it's bullish, right? It's an indication of some expectations that we might have a chance of moving north of 1750, maybe en route of retesting our prior highs back here around 22. Would certainly make sense. But again, it's kind of a longer shot at this. And the volatility for Jan's generally favorable to buy this and sell that, because you're buying the lower vol, selling the higher vol, creating a slightly cheaper spread. In this case, they sold some puts to help finance it as well. Let's look at another one here. So this is one that, Philip Morris did rather well last week, considering, right? On my top down Friday session, I talked about it today. Stock's up 2.25%, and we also saw some option activity come into Philip Morris as well. So again, you think dividends, you think valuation, oversold. We're starting to catch a bit of a rally here. Maybe we got a shot at getting to 96, maybe 98, maybe all the way back. It does pay a decent yield at 5.47%. So when you consider that, and again, this climate of staples leading, this is a staple. And if you look at today's trade on Philip Morris, what you'll see is that in the 10 December, so this is real short dated stuff, 3,000 contracts out here, mostly bought 2,900, mostly bought in around at about 57 to 60 cents. Again, giving an indication what 93. Again, it's not too far out of the money. It's about a 1/3 retracement. We could get more out of this, maybe a near-term pullback. You might look for an intraday retest of today's low and hopefully holding on to that. But this does play in kind of a more of a consumer staples theme. You've got ATVI. There's some bullish trade in Disney today. Bullish trade in UAL as well. Caterpillar, we'll wrap up with this one. Caterpillar was finished a little bit off the highs of 1.76%. But Caterpillar today did experience some bullish trade at the 17 December expiration. And in this case, we're looking at the 215 calls, mostly bought in here, 5,000 contracts traded. So we are looking for near-term upside in Caterpillar towards 215, which happened to be the high before the sell-off. And I lied, we're going to talk about one more here. This is MGM. And again, this fits into that reopening trade, right? Disney, UAL. But again, nice bullish day today at 5%. Again, maybe those Omicron fears are starting to subside. I read today that Omicron's in 35 states in the United States. So far, if we don't shut stuff down, maybe there is an opportunity for a stock like MGM. And people are taking a bet kind of on that prospect that MGM does make a move here. And it's in the 21 Jan expiration. You'll see 11,000 and 10,000 contracts here. This is a 10,000 contract in one print, okay? Buying the 44 and selling the 55. And again, that's a significant amount of potential upside here in the 46, up here at 55. That might be a little pie in the sky, but it is an indication that there is some support here, some expectation that we might have a chance to make a bit of a run here. And in case of trading, you might pare that back a little bit. Maybe you're only looking at seeing maybe getting towards 46, possibly 50. But again, this just might help you look at and give you a reason why you're looking at MGM and maybe providing that bullish outlook. Anyway, folks, it's been a pleasure to be with you today. We'll catch you back next week in the video. Thank you.